Hi guys, welcome to Gold Price Daily Analysis. Today is Monday 6th of May 2019. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We would like to drag your attention to the fact that you do have to check the description of this video for more information and for the links for our chat room. Plus, we do urge you also to watch our last two videos in order for you to get the best of this video. We'll start our cornices right after a quick recap. We have been waiting for important economic data to be released from the United States, and we will going to start with the non-farm payroll came above forecast, and the unemployment rate. It's also highly important, came below forecast. Both the non-farm payroll and the unemployment rate came very good for the dollar, and for the ISM non-manufacturing PMI came below forecast, which is not good for the dollar, but all the attention was on the NFP, and the NFP came good for the dollar. For the gold price action in the last trading session, gold took the advantage of the major sell-off which took place in the US dollar and made it to 1,282. But when it comes to the closing price, we did not have any significant proof that gold is really attempting to test higher highs, okay, like 1,290 or 1,300, since the gold failed to close above 1,282 or at minimum 1,280. For the strategy recap, we said in our last episode that stay on the sell side and wait a break of the most recent lows at 1,266, which shall open the door for 1,245. That's all for the strategy recap. We'll move on now to the economic calendar. On the economic calendar for Monday, we are waiting for the following economic leaders from the European Union countries and the European Union as all. We are waiting from Germany, the German Services PMI and the Composite PMI, and we are waiting for the Italian Services PMI, Spanish unemployment rate, and we are waiting also for the European Union Services PMI and the retail sales. That's all from the European Union. We are moving now to the United States. We have no actually important economic data to be released, but we have the FOMC members, both Harker and Williams, shall have speeches to be delivered throughout Monday. That's all for the economic calendar. We'll move on now to the technical indicators. On the last trading session on Friday, we have had a trading range from 1,267 to 1,282. The numbers are rounded and the market is closed. Gold spot printed a close price on the last trading session on Friday above 1,278. The numbers are rounded. For the daily simple moving averages, for the 20 days it's 1,285, and for the 50 days it's 1,298, and for the 100 days it's 1,292, and for the 200 days it's 1,250. This is what we were trying to say, that gold is trading in a very narrow range and it's unable yet to reclaim the 20, 50, 100 days daily simple moving averages. However, for the RSI readings, the 1 hour is 62 bullish, and for the RSI 4 hours is 54 bullish as well, and for the RSI 1 day is 45 neutral. Also, this is what we were trying to say, that we did not have a significant proof that gold is attempting to test highs. So for the supports and resistance, supports at 1,275, 1,271, and 1,266. If 1,266 is broke, you may see 1,245. For the resistance, 1,282, 1,285, and 1,292. That's all for the technical indicators. We move on now to the trading strategy. For the trading strategy, the trend is bearish since we have closed below 1282. The price action is positive since we have had a higher low and a higher high, and we are below 20 days, 50 days, 100 days daily simple moving averages, and the US dollar shall rise. Let's consider the following. The up move in the last Friday session was on the back of a broad sell-off in the US dollar. This is number one. Also, we have to consider the fact that the sell-off in the US dollar was pure technical. US data was mixed, that's true, but the very important headers, which is the non-farm payroll and the unemployment rate, both were better than expected, especially the unemployment rate. It's been a long time, did not move below 3.8%, which indicates a pick up in the labor market. So gold also failed to close above 1,282, though of the sell-off in the US dollar, and gold even failed to close above 1,280. So we don't have really significant proof that gold is attempting to test highs. So our advice, providing the latest updates from the FOMC statement, again, we see the gold is a sell from the current prices with an initial target of 1,245. Why the FOMC statement? Because it indicates that the Federal Reserve Bank is neutral on the US dollar when it comes to the interest rate. And this is a very important update to conclude before taking a decision. There is one risk factor on this theory, that there is a possibility of tension to arise between the United States and North Korea. But in my opinion, the market is used for such a tension between the two countries, and this will not affect the prices of gold. That's all for today's video. Thank you guys for watching. Please like, share, and subscribe. And I will see you tomorrow in another video.